Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in, and the question is are residential mortgage rates positioned to start free falling downward? And today, those are the exact things that we're gonna look at just to try to determine what to do next. So we're gonna explore an article from Zillow, and then we're also going to listen just to a little bit of Jerome Powell's most recent speech about his plans, or more specifically, the Federal Reserve's plans as far as quantitative tightening and increasing the federal funds rate, because it's going to become increasingly more difficult for well-positioned buyers to continue to have the self-control, and I know I'm one of these people, to keep them on the sidelines. It's really easy to stay on the sidelines when we are clearly at the top of the bubble. But now that rates have balanced out per se, and now that we've hit peak inflation per se, should we rush back in to buy houses because there's so much pent-up demand on the sideline? So you guys, those are the questions once again that I'm going to help answer today. And again, towards the end of this video, guys, don't forget, we're going to listen to a little bit of Jerome Powell's speech just to try to figure out what he's saying. Is he going to, has he pivoted? Is he going to pivot in December? There's so much craziness right now and so much speculation as to what's happening. But the reality is, guys, Jerome Powell has told us what he's going to do. So there's not, too much guessing. There is a lot of guessing, but not too much guessing needed. Regardless, stay tuned towards the end of the video for that. But right now, we're going to access a Zillow article that's titled, "Mortgage Rates Flat Appear Ready to Fall." So just real quick, guys, I just want to confront, the optimism once again from Zillow. So they're saying that they're, appearing that they're ready to fall. But again, you guys, that's just not the case, because in order for that to happen, essentially, Jerome Powell and the Federal Reserve would have to pivot. They would have to start reducing the federal funds rate again. And that's just not going to happen. They've said that it's not going to happen. So again, the over-optimism is it's just sickening, guys. And again, as we move into 2023, this is going to be a lot harder for well-positioned buyers to really determine when is the right time to buy. Because again, remember this, and I've been saying this the whole time, the right time to buy varies drastically depending on the person and drastically depending on the needs, right? Depending on the area as well, the location of the property. So there's a lot of things that differ from one person to the next. So I get that, guys. Regardless, let's jump into the article and see what it has to say. And look at how brief that Zillow is being. I mean, it's pretty astonishing that they've kind of stopped reporting per se, because they've been wrong so much. They've been overly optimistic way too much. And quite frankly, they've probably ruined a few people's lives by giving bad advice. I don't know that for sure, but I'm willing to put money on it. But let's read this article, guys. Mortgage rates were flat this week, but they appear ready to fall as markets continue to digest comments from the Federal Reserve chair. After falling sharply in response to October CPI data, mortgage rates have been remarkably steady over the last few weeks. Investors have clearly viewed the inflation report, which hinted at a long-awaited deceleration in consumer price growth, as evidence that the Fed will take its foot off the microeconomic brake and slow its pace of interest rates hikes. This hypothesis seemed to be validated on Wednesday, as Fed Chair Powell signaled in a speech that the central bank is likely to decelerate its pace of rate increases beginning in their December meeting. And this is what I want to talk about here shortly. And are seeing signs that further inflation slowdown should be coming in the next few months. The statement was more than enough for investors. Bond yields, which influence mortgage rates, declined in response. Mortgage rates are likely to follow suit in the coming days, and that is a reality. That said, Powell pointed out that more work needs to be done to bring inflation back to the Fed's target. And there are plenty of blockbuster economic data releases on the horizon and geopolitical dynamics that could alter this outlook. But it's likely that mortgage rates will enjoy more calm and are likely to ease down leading up to the next key CPI report due in just a couple of weeks. Now, real quick, guys, that CPI report, and I believe it comes out, I believe the 13th I think it's the 13th of December. I'll have to double check that. But that CPI report is super important. It's super important, guys. There's so much emotion going on in the market. But essentially, again, what happened is October, inflation came in at 7.7. People started freaking out. They got excited. They jumped back in the market, probably started spending money recklessly again. But the reality is, guys, 7.7 is still, by anyone's standards, any economist standards, unacceptable. It's completely out of control still. The reason why the market rally is a lot of people figure we're past peak. And like this article is pointing out, a lot of people are now figuring that, okay, the Federal Reserve can slow down now. But I have to remind you guys, the speed at which they have been increasing their interest rates is historical. It's historical. Even if they don't do the 75 basis point rate hike in December and only do a 50 basis point rate hike, y'all, that's still insane. That's still massive. That's like 200 to 500% higher than the rate increases they did back in the last Great Recession. Remember, it was only 10 to 20 basis point rate hikes back then. Right now, even 50 basis point rate hike, guys, astronomic, okay? It's astronomic, but here's what I want to do. So in other words, you guys, interest rates are going to go up more than likely. I mean, I don't have a crystal ball, but the Federal Reserve is saying, we're going to continue this path of rate increases. We may not do 75 basis points, but we're in this for the long haul. We're going to keep tightening rates until things get better, right? Until inflation's under control to 2%. Raise your hand if you think they're going to get inflation down to 2%. I mean, seriously, guys, do you really think they're going to get inflation down to 2%? Do you know the breaking and pain that would have to happen for that? So again, just be very cautious, guys, and be very aware of what's going on with the CPI reports, with the Federal Reserve, because all of that has a great impact on our lives, on our desire to be homeowners. So it's really important to keep our eyes on them. But what I want to do now, guys, is let's listen to a little bit of Jerome Powell's speech on Wednesday so that we can kind of pinpoint what is the plan of the Federal Reserve. Are they going to lower interest rates in December? Are rates going to go back down into the 5% residential mortgage rates? The answer, guys, is no. But take a listen.
PCE inflation through October ran at 6.0%. While the October inflation data received so far showed a welcome surprise to the downside, these are a single month's data, which followed upside surprises over the previous 2 months. As Figure 1 makes clear, down months in the data have often been followed by renewed increases. It will take substantially more evidence to give comfort that inflation is actually declining, and by any standard, inflation remains far too high.
So you heard Jerome Powell say that even though, they got some good surprises, so what this means is what the Federal Reserve is doing is working, which is good. If you're on the sidelines like I am, that's good. We want their work to work, right? We want the things that they're doing to have an impact on affordability and balance as in the housing market, right? We need more inventory. We need things more affordable. But I really want you guys to focus all of this premature running back into the market and this over optimism. Jerome Powell is clearly saying right now, this is just 1 month of report. Yes, there was some surprises. Yes, what we're doing is working, but it's just 1 month. And often good news is followed by bad news. I mean, he said that. Y'all heard it. He said that. But again, we'll know more when the CPI report comes out. But nevertheless, y'all, we still have a very, very toxic inflation battle that is in the horizon that we're going through right now. So in other words, the tightening is not going to stop. Listen to what I'm saying, okay? It's not going to stop. Regardless, let's jump back in and listen to a few more things with Jerome Powell right now.
So when will inflation come down? I could answer this question by pointing to the inflation forecasts of private forecasters or of FOMC participants, which broadly show a significant decline over the next year. But forecasts have been predicting just such a decline for more than a year, while inflation has moved stubbornly sideways. The truth is that the path ahead for inflation remains highly uncertain.
So he's essentially saying that the people that expect inflation to go down next year, and more than likely it will, right, have been wrong constantly. So he's even himself, he's acknowledging they've been wrong multiple times. And he's essentially also saying that they don't know what's going to happen. There's so much uncertainty because of all of the money printing. This is all unprecedented. This is all new territory per se. You know, it is possible that just some evil geniuses in a boardroom decided to do all this to us, right? And they're far more superior than us. But all I'm saying, I'm looking at this man, he's telling us there's a lot of uncertainty and a lot of people have been wrong the entire time. Okay, so if he's saying, you guys, this is very uncertain. The people that have been guessing this whole time and estimating have been wrong. Do you really want to jump in the housing market, y'all? So I understand that the dust is settling more so, and that's good. We want the dust to settle so we can see the direction of the housing market, but it's not completely settled yet. And he's saying it. Jerome Powell is saying that. Let's listen to a little bit more, and then we're going to wrap this video up.
The macroeconomic conditions we think we need to see to bring inflation down to 2% over time. For starters, we need to raise interest rates to a level that is sufficiently restrictive to return inflation to 2%. There's considerable uncertainty about what rate will be sufficient, although there's no doubt that we've made substantial progress, raising our target range for the federal funds rate by 375 basis points since March. As our last post-meeting statement indicates, we anticipate that ongoing increases will be appropriate. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting and the summary of economic projections. I will return to policy at the end of my comments, but for now, I'll simply say that we have more ground to cover.
So he himself is telling us we have more ground to cover. And then what's different than the September meeting is he's essentially saying we may have to have interest rates risen higher. Did y'all just hear him say that? Rewind the video and listen to him carefully. He's essentially saying that the plan in September to right now, they're going to potentially raise interest rates even higher. What he's saying is we're not going to do it as rug pulling, right? They're not going to do it as sharply because these super sharp increases of like 375 basis points in interest rate is wreaking havoc in the entire mortgage and real estate industry because those sudden rate increases, it wrecks the entire market because it takes time for the market to adjust to such rapid swings in interest rates. So for that alone, that's actually good. It helps us as professionals. It helps us give consumers more accurate information when it comes to interest rates, closing costs, pricing, buy downs, and things like that. So to be honest with you guys, that's good. But again, I'm looking at the underlining things that he's saying. He's essentially saying it's uncertain. We don't know what's going to happen. We're probably going to raise rates even higher than what we originally thought. But what we're doing is seeming to work. So in other words, we have, and he's also saying we have a lot more ground to cover. So again, you know, preferably in a perfect situation here, you guys can wait as a potential homeowner, not wait too long because we don't want to get trapped renting. We do not want to get trapped renting. But in an ideal situation, you guys wait till his work is done. You guys wait till the dust has settled. You guys wait till after the Federal Reserve pivots and a little bit of time after that. And then you go purchase. Now, I'm a well-qualified buyer. I'm sick of throwing my money away in rent. And it's almost getting to the point where it makes financial sense for me to purchase. Not yet, but it's getting there. And again, you guys, when that happens, it's especially important to be in control of our goals because it's really easy to stay like disciplined when we clearly know we're at the top inside of a bubble, right? But when we're out of the bubble like we are now, we're starting to go downwards, it becomes a lot more difficult. So put that in perspective. In conclusion, although the dust is starting to settle, although we may have hit peak inflation, the Federal Reserve may not be doing 75 basis point increases anymore, but it's still way too soon to go back into the housing market. Now, personally, my goal as a well-qualified buyer is to purchase in Q1 of 2023. But again, you guys remember what I just said. I'm a well-positioned buyer without consumer debt, and I would be expecting additional equity declines. Now, having said all of that, I definitely do not believe it is the right time to buy. I think for most of the first-time home buyers that are not as well leveraged as I am, I believe the best buying opportunity for them might actually be Q1 of 2024. So, it's possible looking at the data. Now that the dust is starting to clear a little bit, I'm trying to kind of figure out when are we going to hit bottom, and I believe that is possible. Q1 of 2024. I don't know for sure that, again, I am not confident in calling a bottom because because essentially I'm guessing what liars are going to do, right? And there's a lot of data that we don't have. But I believe for, normal first-time home buyers that are not as well, that is not as well positioned as us, that are frustrated with unaffordability and things like that, I think that they're going to start seeing that freedom again, that affordability again in Q1 of 2024. And I also believe that before Q1 of 2024, the Fed will pivot, rates will be a little bit lower. And again, I think that's when we start to see more affordability. Because right now, guys, even though prices are going down, things are still way unaffordable. So we need both those things to happen. We need prices to go down, and we need, and we need things to be more affordable. Now, guys, I really appreciate you traveling along this journey with me. I hope you guys got some value and perspective from today's video. And if you're out there investing in real estate, I wish you luck, and I hope you win.